Hey, real talk, a $500,000 house doesn't even raise an eyebrow anymore, does it? 10 years ago, that number felt like rich people territory. Now, in 2026, in a lot of cities and suburbs across the US, it's basically the starting point for a decent family home. But here's the question I wish someone had asked me earlier. Can you actually afford it? Or are you just barely qualifying for the loan? Because getting approved and living comfortably are two totally different things. Today, we're doing the real math, no sugarcoating, no doom and gloom, just straight facts so you can make a smart call. Buying a house is probably the biggest money move you'll ever make. And the toughest part? A ton of people buy homes they can technically afford on paper, but end up feeling trapped. They're scraping by every month, skipping vacations, stressing over repairs, and wondering where their freedom went. I've seen it happen to friends, and I don't want it to happen to you. Let's look at the full cost so you walk in with your eyes wide open. Okay, the sticker price is $500,000. Cool, but that's just the entry fee. You're also signing up for interest, property taxes, insurance, repairs, and all the surprises that come with owning a home. It's not just a house, it's a lifestyle commitment. Let's break it down like we're sitting at the kitchen table running the numbers together. Important note, these are national US averages. Rates, taxes, insurance, and costs vary a lot by city, state, credit score, and lender. Always plug in your own numbers on a mortgage calculator. Most lenders love seeing 20% down. That avoids private mortgage insurance and gets you better rates. For $500K, that's $100,000 out of pocket. Yeah, 100 cash. Not borrowed from mom, not pulled from investments you need for retirement. If you put down less, say 5-10%, you'll pay PMI every month, your payment jumps, and you're taking on more debt. So ask yourself honestly, do you have that kind of savings sitting ready? If not, that's okay. It just means timing might not be right yet. Let's run a realistic scenario. $500,000 home. 20% down $100,000. Loan amount $400,000. Current 30-year fixed rates are hovering around 6.2% as of February 2026. That puts your principal plus interest payment right around $2,460 per month. Not terrible on its own, right? But hold on, we're just getting started. And if rates drop further to 5.8%, your payment could be roughly $200 lower. That's real money back in your pocket every month. This is where most budgets quietly fall apart. Property taxes depend on where you live, but nationally you're looking at roughly 1.5% of home value. On 500K, that's $5,700 a year, or $420,625 per month. Let's call it $500 average. Homeowners insurance rates have climbed the last few years. For a $500K home, expect $200-300 per month. Let's say $250. Maintenance and repairs, the old rule of thumb is 1% of home value per year. That's $5,000 or about $420 per month set aside because stuff breaks when you least expect it. Home fees, if your neighborhood has one, easily $100-400 extra. Added up conservatively, mortgage, $2,440. Taxes, $500. Insurance, $250. Maintenance, $420. Total, net $3,610 per month. That's the real payment, not the one on the mortgage app. Here's the rule financial planners love. Housing costs shouldn't eat more than 28-30% of your gross income. At $3,610 month, you'd want roughly $12,000-13,000 gross monthly income. That's $145,000. $155,000 household income per year, and that's before you save for retirement, kids' college, vacations, emergencies, or just enjoying life. If you're stretching to hit that number, one unexpected expense can throw everything off. I've talked to people making solid six figures who still feel broke because their house eats half their paycheck. They thought, we'll make it work. Then, the act dies, or someone loses a bonus, or daycare costs spike, and suddenly, the dream home feels like a weight. It's not about being reckless, it's about the math being tighter than it looks. Realistically, you're in a strong spot if household income is $150K plus dollars and a norm. You've got healthy emergency savings after the down payment, little to no high-interest debt, especially credit card. You plan to stay. 7-10 years to build equity and offset closing costs. You actually like budgeting for the extras. If that's not you yet, no shame. It just means you're smart enough to wait and build a stronger foundation. There's zero wrong with wanting a beautiful home. We all do. But the best homes give you peace, security, and freedom, not constant money stress. Sometimes, the bravest move is waiting a couple years, stacking cash, and buying something you can truly enjoy. Because a house should lift your life up, not hold it down. If this helped you see the bigger picture, hit that like button. It really helps the channel reach more people. Drop a comment. What's your biggest home buying fear right now? And if you want more no BS money breakdowns like this, subscribe and turn on notifications. Numbers don't lie, but hype sure does. See you in the next one.